So why are markets trading lower today? What's going on, guys? It's Ricky with TechBud Solutions here with a super quick market update. I really hope that you learned something new. And if you do, please consider dropping a thumbs up and subscribing if you feel like we earned it. So first off, NASDAQ QQQ is down 1.7% on the day. Right at market open, we actually saw a quick little reversal. I wouldn't call this a bull trap. I would technically more call this a bear trap. Markets were consistently selling off, forming lower highs and lower lows. All of a sudden, market opens, we see a sharp decline and then a quick recovery, breaking above the moving average, and then now finally giving it back and making new lows. Now, although the NASDAQ market is selling off, not everything is aggressively dropping. Now, there are a few that are definitely seeing a nice retracement, but the question is that a lot of people are asking is why? Why are markets dropping? The collapse of the G7 bond markets. Despite aggressive global central bank rate cuts, yields are surging in France, Japan, Germany, Canada, the US, and the UK. The market is quite literally rejecting central bank interest rate cuts. How did we end up here? I want to remind you, everyone continued to point the finger. Trump continued to point the finger, and everyone would mimic what it was that he was saying. Look what all these other countries are doing. Look how much they've cut rates. Look how much the UK has cut rates. Look how low their interest rates are. Pretending like that actually mattered. The thing that people don't understand is it is almost like now we're going to be put in that same position because of how aggressive other markets have been cutting rates. We have also seen that their inflation rate is now also beginning to rise once again. Remember, cutting rates is inflationary. And when you mix that with tariffs, which have a history of being inflationary, this is why our Federal Reserve has held back from cutting rates early on, because they simply wanted to see the data. They wanted to see that when Trump is not pausing and red light, green light with tariffs, as all of you guys have seen, what actually happens and the implications that would reflect with our data. It's literally common sense. You announce tariffs. Tariffs have a history of being inflationary. The Federal Reserve was ready to cut rates at the start of 2025. But as soon as these tariffs got announced, again, they're inflationary. So they have to be, or they want to be, more cautious. And this is why. Because now that the Federal Reserve is expected to cut rates in September 17th is the next FOMC rate decision. According to the most recent Fed rate monitor tool, there's about a 90% probability that the Federal Reserve is going to cut rates. Great. You guys are finally going to get what you guys all wanted, right? But what? What's happening with the UK? They've been cutting rates, but yet their bond yields are surging. And the UK inflation rate is rising. Oh my God, wait, it's not going to be all good. Correct, because if you actually pay attention to what is going on in our economy, the stock market is not a representation of how our actual economy is doing. There's the huge disconnect. People always try to argue it, and it's going to be our chance. This explains what is coming next for the US and why gold is surging. The Fed is about to cut rates in inflation that is above 3% and rising. So we already have our inflation rate now rising. Now everyone's been begging the Federal Reserve to cut rates. Trump has been threatening going above and beyond to cut rates. So now that they're going to start cutting rates, you will get a taste of what we are about to experience to put us back in the same terrible position that we were 2.5 years ago, when all the Federal Reserve was forced to do was cut rates aggressively to boost our economy, to stimulate our economy, driving inflation to 9.1%, and then aggressively having to raise rates to now slow down our economy. But now we have a little bit of a different mix. We still now have bond yields going up, and yet the Federal Reserve is still cutting rates, and yet inflation is, again, beginning to uptick. So it's going to be, again, very interesting to see how things continue to develop. We are seeing it in the UK market. We're seeing it in global markets, and that is why the market is selling off. Also, historically speaking, September does tend to be more of a red month. If you look at the past 15 years, more often than not, September is a little bit more of a red month, which doesn't really surprise a lot of people, especially based off of the recent rallies that we've experienced. Markets are incredibly inflated. They're incredibly overpriced. You have companies that are bullshit AI companies like Palantir trading at over 450 times their earnings. Again, this is only during inflated markets. Just like we experienced in 2021, we then see strong corrections shortly after when, again, market conditions are not as favorable for those bullshit companies. So very excited to see this retracement and see if when the Federal Reserve does begin to cut rates, if we do get markets to push to new all-time highs for a short period of time, or if it all begins to fall apart and we pay the price for driving markets even higher. And it's not me, it's not you necessarily. It's I would say institutions. Institutions are putting things in place to allow not just retail traders, but investors to drive markets to these insane and overvalued levels. They provide you guys with tools and resources to be so leveraged that at a 10% retracement, you're going to get a margin call. And again, you don't think about these things when direction is in your favor, but as soon as that direction turns against you and you're down 10 or 20%, but you're on 40x leverage, it's going to be a tough pill to swallow. So again, you should never be afraid to take advantage of opportunities. Just be mindful of the margin that you are using, be mindful of the leverage, and just be mindful of overbought levels. It should never discourage you from being invested. It should just encourage you to be calculated with your position size. Position size management is super important. So again, if you want to learn a little bit more about these concepts, I trade live every single morning. If you want to tune on in, it's the second link in the description down below. I'll be live at market open tomorrow. Like always, let's make sure that we end the year on a green note. Take care, team.